Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 trending tech stocks, so let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're using the TipRanks trending stock tool to take a look at a few companies that have been picking up a lot of analyst attention lately. So we're going to take a look at these companies, what news is attracting those analyst ratings lately, and what they're predicting for the stock's future. You can check out the trending stocks tool for yourself over on the TipRanks website by following links in the description down below. Now let's jump right in. First up, we have a company called HashiCorp. Their stock trades under the ticker HCP, currently priced at $26 per share. Now they have had a rough year, currently down 20%. But just today, the stock has taken a big drop. They're down 21% over the last 5 days. HashiCorp is a leader in multi-cloud infrastructure automation software. The software suite enables organizations to adopt consistent workflows and create a system of record for automating the cloud for infrastructure provisioning, security, networking, and application deployment. They offer products as open source, enterprise, and as managed cloud services. Their stock is falling today following their earnings report, but they did come out with both an earnings and revenue beat. However, the negative reaction is due to a workforce reduction and revenue guidance cut. For their Q1, they reported a loss per share of 7 cents, which was actually 7 cents better than analysts had anticipated. And their first quarter revenue came in at $138 million, which was an increase of 37% year over year. But the company did end up lowering their full year revenue outlook, and also announced targeted cuts in discretionary spending and a workforce reduction of approximately 8%. They did say that they are responding to the current customer and economic environment with proactive actions to lower their ongoing costs. They believe that these actions will be better positioned for opportunity. Following this earnings report, we have a lot of analysts reiterating their price targets. Now, many of them are lowering their price targets, but maintaining a buy rating. This could signal that they believe the dip could be a good opportunity. One analyst noted that the guide down for the outlook is about sales execution in light of a tougher macro environment. However, the post-earnings sell-off is putting the price at a level where investors will be rewarded for patience. Another said that the firm believes HashiCorp remains a long-term beneficiary of secular cloud growth and is positioned to re-accelerate growth in coming years. The stock currently has 15 analyst ratings, coming in as a moderate buy. That breaks down to 10 buy ratings and 5 holds. The average price target comes in at $33, which would be an upside of 27%. And you can see we do have a wide range of price targets. On the low end, we do have a hold rating from JP Morgan with a very slight downside. But on the high end, we have one buy rating from Oppenheimer with an upside potential of over 60%, so a big range there. Our second trending tech stock should probably not come as a surprise if you've been watching the news at all lately. That is Apple. Trading under the ticker AAPL, their stock is currently priced at $178 per share. Now, they have seen growth of over 21% this past year, but have actually been moving downwards this past week, down over 2.6% in the last 5 days. This stock movement all kicked off earlier this week when they presented at the Worldwide Developers Conference. It was here that they unveiled their biggest product launch in nearly a decade. That was their AR virtual reality headset. They announced their Apple Vision Pro. It is built from glass, aluminum, and carbon fiber and is meant to blend uses between virtual reality and augmented reality with an array of sensors and cameras working through a single piece of upfront optical glass acting as a large lens. The most shocking thing was possibly the price target, coming in at $3,500. Despite this big product launch, many outlooks on the Apple stock remain unchanged. One Morgan Stanley analyst said that the launch played out as expected, with the price tag being the only surprise. They see the device as a long-term show-me story until a killer app is established. They noted that while the Vision Pro looked sleek and differentiated and performed with clear potential, Apple's Vision still faces a handful of hurdles. That means the Vision Pro is not ready for mass consumption. Of course, the Apple stock gets plenty of attention from Wall Street analysts and currently has 30 analyst ratings. It currently comes in as a moderate buy with 23 buys, 6 holds, and 1 sell. The average price target of $186 would be a slight upside of 4.5%. On the far right, though, you can see we have a wide range of price targets. Looking at the most recent ratings, on the low end, we do have a hold with a price target of $149, which would be a downside of 16%. On the other hand, we do have buy ratings up above $200 for upside potentials of over 17%. And our third trending tech stock today is GitLab. They trade under the ticker GTLB, priced at $46 per share. Now, they are down overall this year, about 8%, but have seen big growth this past week, gaining 34% in the last 5 days. GitLab is the DevOps platform that empowers organizations to maximize the overall return on software development by delivering software faster and efficiently while strengthening security and compliance. The company kicked off this week with their Q1 earnings report, and as you can imagine, the results came out better than expected. They reported a loss per share of 6 cents, which was 8 cents better than analysts had anticipated. Revenue of $126.9 million grew 45% organically year over year. They also boosted their full-year forecast and on top of that announced plans for generative AI Add Ons. Their CEO and co-founder said that with AI revolutionizing how companies develop, secure, and operate software, we believe GitLab is positioned as the leading AI-powered DevSecOps platforms. Today, we deliver more AI-powered capabilities to customers than any other DevSecOps platform. Their stock currently has 16 analyst ratings, coming in as a strong buy. That breaks down to 12 buy ratings and 4 holds, with an average price target of $51 per share. So that would be an upside of 11% still, even after this week's gains. And we have a lot of 5-star analysts reiterating price targets this past week and some assigning new ones. We do have some holds with downsides. On the low end, we have a hold from JP Morgan with a downside of 15%, but on the high end, we do have a rating from Goldman Sachs with an upside of 52%. So there we have 3 tech stocks that have been trending with Wall Street analysts this week. Let me know your thoughts on these companies in the comments down below, and if you're feeling optimistic for their future or not. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant for entertainment and information purposes. Make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.